Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Now, an extended conversation with Edward Yardeni. He's Yardeni Research, definitive at C.J. Lawrence a few years ago. A long tour of duty, a must-read at Prudential-based Securities, and has been one of the true bulls of his roaring 20s. Ed Yardeni, how roaring are our roaring 20s?
Well, I think things are looking better ever since April 9th, which was the postponement of the so-called Liberation Day. And then, of course, on May 12th, there was another postponement of the tariffs on China. And so the stock market's had a V-shaped recovery since then. And the stock market's had a kind of a roaring 2020s correction, followed by an amazing recovery.
Let me translate the modesty you just heard there, folks. Ed Yardeni defined bond, equity, currency, commodity vigilantes. Ed Yardeni, the vigilantes spoke, didn't they?
Absolutely. It was on April 8th, the day before the postponement of the tariffs, that the bond yield basically went up from 4% to 4.5%. That got the attention of the administration, freaked them out, actually. And even the president acknowledged, verbally said that, that the bond market's reaction to his policies led him to postpone the tariffs. He subsequently denied that, but he said it. And it's pretty clear that he had sort of a Bill Clinton moment back in the early 1990s. James Carville and Robert Rubin warned Clinton that he had to have fiscal discipline, otherwise the bond market would come and get him. And that's exactly what happened to Donald Trump on April 8th. And then he reversed his policy, or postponed his policy, on April 9th.
Ed, we still have, even though some of these tariffs have been rolled back, we still have tariffs that are well in excess of kind of where we started the year here. How does that impact economic growth, inflation? How do you kind of factor that in these days?
Well, first and foremost, I've been observing and predicting a continuation of the economy's resilience. It's been over the past 3 years, we had the most widely anticipated recession of all times that never happened. It was the Godot recession, the no-show recession. And now and that was in expectations that the tightening of monetary policy would cause a recession. We argued that that might not be the case. And now, of course, the whole tariff turmoil has got people thinking that we're going to have a recession. But those recession odds have been coming down, at least in the part of the consensus. And that's because President Donald Trump has blinked several times on the tariff issue. But as you said, it's still there. It's just not as onerous as it was when it was initially announced. But it does mean that we're probably going to have a bout of stagflation for a few months, where the economy looks somewhat weaker in the summer with more inflation.
So, Ed, given that background, how do you think about this whole allocation, stocks, bonds, alternatives? Kind of where do you see the best opportunity these days?
Well, I've been bullish on this market since November of 2022. So we did call the bottom in October, and it's hard to tell people to jump on board of this speeding train right now. I would just stay invested in the stock market, and I continue to recommend avoiding information technology, communications, industrials, and financials. So I would stay with the stock market for sure.
Right. The ambiguity here, I think, is absolutely profound. And the basic idea here is we have a global lift in yields, whether I look at UK gilts, I look at the real uncertainties in Japan in that. And what's so hard in the modern media is to understand the zeitgeist is higher yields are bad. Push against that.
Well, higher yields should be bad, but they haven't been bad. We have seen a global bull market in stocks, even though we've seen bond yields increase. Now, my view is that to a large extent, bond yields have normalized. They're back to where they should be. 4.5% is the right bond yield for the U.S. economy. That was the case before the great financial crisis, and I think it's the case against now. Yeah. Maybe we're getting some excesses in the UK and some excesses in Japan, but if you want to be U.S. centric, which to be, I think these bond yields are kind of normal. But I do see a risk that there could be a mini debt crisis, the way there was in 2023. And in some ways, Tom, I hope there is, because I think now's a good time for a debt crisis to get the attention of the politicians in Washington, that they got to get their act together.
Ed Yardeni with us, Yardeni Research. We welcome all of you in your commute across the nation. Good morning, Bloomberg 1130 in our global Wall Street. Good morning, I should say good afternoon in England and the city and in Paris as well. Thank you so much for tuning in on all of our audio products. And of course on YouTube, subscribe to Bloomberg podcast. Ed Yardeni's dog on the couch.
The research assistant.
Subscribe to Bloomberg
Subscribe
podcast.
to Bloomberg podcast. Okay.
Yeah, Max, I got a note from Max.
Okay.
The dog looks stressed, Ed. I mean, if I look at the dog, I mean, the tension in the market's really affecting Max, right?
Max really keeps me calm. He keeps me grounded. Sometimes he puts me to sleep, but
he's in charge.
Paul says that about me too.
Exactly. Hey, yeah, you mentioned a debt crisis. I mean, I've been in this market since the mid '80s. We've been talking about deficits and the national debt, and it just doesn't matter. Is
really
what
important
I've kind
point.
of. Yeah. Can you give us some context there?
Yeah, absolutely. Back in July of 1983 is when I concocted the term bond vigilantes, and I went back and read what I wrote, and I said the bond vigilantes are particularly upset about record $200 billion deficits. And here we're looking at $2 trillion deficits and talking about the bond vigilantes once again. Behind me, I have a bookshelf, and
yes, you do.
On the top shelf, I've got a bunch of books from the 1980s, debt bomb, drowning in debt, all kinds of end of the world kind of scenarios with debt. And here we are, and stock market basically at an all-time high. So the end of the world hasn't occurred yet. And you have some very smart people like Ray Dalio basically arguing that it's imminent, that we're going to have a debt crisis, that we might have a buyer's strike.
This is important. I'm taking Paul's territory here, but it's just too important. When people give you the doom and gloom, isn't that the time where you acquire shares? That's what John Templeton would say.
Absolutely. It's when your gut hurts and you just want to get out. Tom, I have to brag. I have a really good track record at calling bottoms more so than tops. And that's because I have a relative that I don't speak to too often that always called me at bottoms and said, Eddie, should I get out? All of a sudden we're best friends, it's when your Uncle Max calls you up and says, I know you follow the stock market. Should you get out? That usually makes the bottom.
Ed, what do you make in where investors should be positioned in a fixed income market here? Because you consider a 2-year Treasury and make darn near 4%, or do you go out there and take some credit risk?
It's kind of weird, right? Credit risk used to be high yield bonds, corporate bonds. Now suddenly we're all worrying about the 30-year Treasury in Japan. The 30-year Treasury in the United States. So I would stay short for now, but I think there could be a really great opportunity to jump back into the bond market. The 10-year could revisit 4 3/4, 5% here pretty shortly if the bond vigilantes are not pleased with what they see coming out of Washington. And if their view is the big beautiful bill is actually the big ugly bill, we'll know that pretty quickly.
And one of the new areas that's been just seen amazing growth on global Wall Street in the last, 15 years or so has been private credit. How do you think about that when you talk to your clients?
Well, I don't know. I like securities. I like to buy securities where there's a liquid market and I can get in and out and I know what these things are worth. I really don't have a problem with private credit, but I wouldn't overdo it there. Right. I get a little suspicious when I see that the private credit industry is starting to become very democratic and create ETFs that allow them basically to unload the bad stuff into ETFs. So I think they've had a good record, but I'd be careful.
And Yardeni, just one final question here, and I think it's really, really important for it. There's Standard & Poor's 500. How does Ed Yardeni find a select group of stocks within the Standard & Poor's 500 to believe in? Is your method like free cash flow? Is it more economic based, almost a Schiller analysis? How do you go about choosing the security for the long run?
Well, first and foremost, we don't pick individual stocks. That's not our forte. So we basically tend to provide an opinion whether we think the stock market's going to continue to go up and which sectors within that are likely to perform. So I think the short answer is, it's based on the economic outlook. I started out on Wall Street as the chief economist of E.F. Hutton. And then a few years later, I became also the strategist at C.J. Lawrence. So it's sort of combining the two disciplines that guide my work on sectors and industries. We've liked in information technology, we've liked semiconductors, and they've been one heck of a roller coaster ride. But basically, it's been a profitable.
What's your SPX call here, year end or even out 12 months?
Well, I've been doing a lot of work on that, and I just want everybody to know that the DXY dollar index is a very misleading index. It's a fixed weight index. It's not a trade weighted dollar, and 57% of it is the euro. So you might as well just look at the euro dollar exchange rate when you're looking at DXY. I like the MSCI organization actually puts out a daily trade dollar, which is almost identical to what the Fed does. And to me, the dollar remains on an upward trend. To me, the dollar is going sideways relative to developed economy currencies, but in terms of emerging markets, the dollar is very strong. So I'm not in this, end of the world scenario for the dollar.
Well, give me the Standard & Poor's 500. Are you out to 7,000 still? Have you reaffirmed that off of all the tariff news?
Well, I started out the year at 7,000, and I think strategists were generally kind of near that kind of level. Maybe I was at the high end, and Trump got me. So I did lower it to 6,400 in early March, and then in late March I lowered it to 6,000.
Well, I got to make some news today. Come on, can you give me 7,000 here on a sleepy May morning?
I'll give you 6,500, which is what I've raised it to, with the possibility of getting back up to 7,000. But I've told people I reserve the right to change my mind as often as the president does.
Max just rolled over when he heard that. We say good morning to Max on the couch. For those of you on Bloomberg Radio, the dog is casual here on a May morning. Ed Yardeni, thank you so much. With Yardeni Research, again, we protect the copyright of all of our guests' research. Go to Yardeni Research. It's a terrific value. Can't say enough about the use of it off your cell phone.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now from Europe, Holger Schmeiding, of course, with Berenberg. Wonderful to have you in our studio. Thank you. Is Brexit dead? Let's just start with that headline.
No, unfortunately, Brexit is not dead. Brexit is there to stay. We, however, are getting a little pain relief now with the UK drawing a little closer on a few issues to the EU again. Brexit has been really bad for the UK economy, and now the damage will be slightly mitigated.
Do we underestimate growth in the continent and in the United Kingdom? I keep seeing, Paul, 6 months later, oops, and up we go. I mean,
all in all, relative to the circumstances, which are globally not all that good, to put it mildly, Europe is indeed holding up. What we continue to overlook occasionally is that especially Southern Europe is mostly, not all of it, but mostly doing well, reaping the rewards of the harsh reforms after the Euro crisis, and that in the UK already, with Rishi Sunak and then Keir Starmer starting to reset relations with the EU, there is also a bit of a dynamic in the UK.
Is the EU at all receptive to, I don't know, some of the UK's overtures here? If I'm the EU, I'm like, no, you guys already voted.
Well, on the pragmatic level, the EU wants to strike deals, and it is striking deals. Good. Of course, this is the EU, the big EU relative to the smaller UK, which is about 1/6 of the size of the EU economy. And as a result, the EU does not allow cherry picking. That is for the UK to simply say, this is the part we love, this is the part we don't like about the EU, we want to have only the cherries. But we do see pragmatic progress, and in the age of Putin, and also in the age of Trump, we now have to say there is a clear rationale for the UK and the EU to work together on the military, but also easing some of the economic pains from Brexit for the UK.
So we saw the plans coming out of Germany, several months ago about reinvesting in their defense, in their infrastructure. That's fine for Germany. Can the rest of Europe do that?
The rest of Europe does not have the fiscal space for that. But look at a map. Germany is much closer to Russia, to Ukraine, than most of the rest of Europe.
As is Poland, right?
As is Poland. Poland has independently already raised its defense spending a lot, so have the Baltics. Germany was, in a way, the big missing country, the country with fiscal space not doing enough yet, and it's now closing the gap.
So does that suggest that the European economy, like we saw a lot of investors in the first part of this year move money out of the U.S. into Europe in stocks and bonds and currencies. Is that something you think is credible and is longer lasting, do you think?
Well, there was a bit of Europhoria sort of in late February, early March, and that has passed. But that was just a little overdone. The underlying analysis is correct. With Germany getting its act sort of together, never fully, but sort of together, with Germany using its fiscal space to improve its growth prospects via infrastructure, and with Germany doing more to defend itself, and basically also the rest of Europe against Putin, Europe is a more attractive place. And then you have the US problems, you have Trump, you have tariffs, you have the distrust in US institutions, and as a result, the US looks less and Europe looks a bit more attractive.
I don't care about the economics. Do you see a boom year for tourism in Europe?
I'm going to be there in September.
Too much a word,
no,
but
I'm going to be there in September.
This is one of part of the European economy which looks set to grow quite nicely.
And it's like a big part, right?
It's a significant part for Southern Europe especially. And indeed, tourism looks good. Industry, of course, and a few services are still under the cloud of the Trump trade wars. But tourism is good. Welcome to Europe. I tell you, it's a great place, as of course.
Oh, really? And I looked at the obligatory flight. I call it 5756, which is United out of Newark. Just happens to be the flight I look at. Yeah. And they're giving it away, Paul.
Are they?
Ready? $3,004. Holger Schmeiding class.
You're going, you're not going, you're not back of the bus.
That's like new low. I mean, that's.
But Tom, Holger, we've got the euro at 1.12 here. We're not at parity for the euro. How high? I mean, is that reflective of the expectations for Europe in general?
The euro is still a bit undervalued. If I compare
undervalued. Okay.
If I compare what I pay here in New York for my hotel and for my tea relative to what I would pay in a major European capital, and if I compare many other prices, the euro is still modestly undervalued. We will likely go towards 120. Over the course of next year, probably
120.
And then we'll have to see if the US gets its fiscal house in order or not. If the US does not, 5 years from now, we might be at 150.
A million years ago, the trade minister of France, her name was Lagarde, called me up and said, you got to go to this meeting in New York. And it was on innovation and technology. They were setting up a satellite out of CDG in Paris. Okay, every article is Europe's missed the boat on technology. Holger, how do the leaders of Europe initiate catching up in technology?
We will catch up in using the new technologies. We've always been good at that. The internet wasn't quite invented in Europe, but the Internet of Things, this is where Europe is very strong. The same will likely happen with artificial intelligence, unfortunately, partly because we don't have the capital market and the institutions to scale up the many startups we have as rapidly as it happens in the US. We will not have the really, really big immediate pioneer companies on artificial intelligence. Right. But when it comes to using our highly qualified workforce, to turn artificial intelligence into something that's good for all of us, then European companies will be there.
This has been wonderful. Holger Schmeiding, thank you so much for Berenberg.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Angela Stent was my book of the year. I made my book of the year a couple of years ago on a February, I think, Thursday. Her book is Putins World. It is the single one biography on the makeup of Vladimir Putin. We're honored that Angela Stent could join us this morning. Angela, chapter 3 of your book, Ambivalent Europeans. Is Vladimir Putin an ambivalent European?
I think Vladimir Putin is by now a convinced Eurasianist, even though he speaks German and he lived in East Germany for 5 years. I think if you listen to what the Russian talk shows are saying and what even Putin himself is saying, they're highly critical of the Europeans because they're now in a situation where the Trump administration has been able to accomplish what neither the Soviet Union or post-Soviet Russia was able to do, and that's to split Europe from the U.S.
Is President Trump helping or is he in the way of a constructive outcome?
So I don't think he's helping at the moment because, having gotten the Ukrainians and the Europeans to say, yes, we have to have a 30-day interim ceasefire before we can really negotiate, Putin has refused to do this. Apparently, in the phone call yesterday, they didn't even discuss a ceasefire in 2.5 hours. So that's really not helping get us anywhere nearer to stopping the killing and talking constructively about what comes afterwards.
In reality, Angela, I think just by looking at history over the last 100 years, Russia's not going anywhere. They can keep at this for as long as anybody can. Is there any leverage anybody has over Russia?
So, there is a big package of sanctions that's being prepared bipartisan by the U.S. Congress, Republicans and Democrats. The Treasury Department has a sanctions packet ready to go. Scott Bessent put it on President Trump's desk, but nothing's happening. They're not imposing any sanctions. And that's what Putin really wanted to avoid. And the other thing that could be done would be to give Ukraine more arms to help it push back more, because nobody thinks there's going to be another supplemental coming forward. So the only other leverage there is, of course, oil prices. And $60 or above oil prices is what keeps the Russian economy going and the budget doing well. If oil prices remain low, certainly in the 40s or even the early 50s, by next year, that will have a fairly serious impact in Russia.
Aside from President Trump, is there anyone in Congress who feels like something needs to be done, or is this squarely on the president's desk at the moment?
I mean, Senator Graham has been one of the supporters of the sanctions bill. There are a number of both Republican and Democratic Congress people who think that we should be imposing more sanctions. But every time there's talk of it, it doesn't happen.
I mean, Angela, I'm out of time, but I've got, there's so many important questions. Let me go to the Kremlin. How alone is Vladimir Putin? He's calling every shot? I guess we assume that from your wonderful book, but is there an after Putin? Is there a process in Russia with Putin or after Putin?
So we have no idea about that, but it doesn't look as if there is, because every time you have an up-and-coming younger person who maybe be a successor, they're not. So what Putin has the backing of Xi Jinping. That's probably the single most important thing.
Very quickly here, Professor Stent, just as simple as I can, do you believe in the domino theory here?
The domino theory that
after Ukraine, he looks at one of the Baltic states. After Ukraine, he looks at 14 feet into Finland. I mean, is there a domino theory here?
I do believe in it. I don't think it would happen immediately, but if Putin wins in Ukraine, then Ukraine isn't the last country that Russia's going to attack.
Angela Stent, thank you so much. I'll tell you, folks, it's a 2-book tandem on Russia. Stephanie Baker's wonderful book. It's been hugely successful for Ms. Baker of Bloomberg in London, Punishing Putin. And the foundation before that is Angela Stent's Putin's World, Russia Against the West. I can't say enough about that book as a 1-volume read, mesmerizing on the youth and the upbringing of Vladimir.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Daniel Tannenbaum is a global traveler with Oliver Wyman and joins us here. He is world expert on sanctions and so much more. Does the disarray in the domestic issues of America, does that diminish our execution of foreign policy, Dan?
I think it does. I talk to folks in the European Commission and the British government often. They are emotionally resigned to having to deal with and constrain issues like Russia without U.S. involvement. In February, they were reluctant to believe it. I think everyone realizes there's enough issues in the U.S. going on that dealing with Russia offensively is not a high priority. So I do think some of these domestic issues are having an impact. But in a sense, he is a unifier, but in not ways that benefit America. You're seeing trade deals get struck that don't involve the U.S., like Mercosur and the EU. So it is creating an impact that may not be as beneficial to the U.S. in the end.
Dan, what do you make of the phone call President Trump and President Putin had yesterday regarding Ukraine? There's some differing reporting about what actually was achieved. What's your read of that?
I think we kicked the can again. It doesn't sound like any concessions were offered on the part of Russia. The big announcement that the president made, that President Trump made after the call, was that there will be more talks. Well, what was last week in Istanbul when there were already talks? I mean, if the whole point is trying to force Russia to reverse course, talks aren't going to do it. We saw today the UK and EU have announced additional sanctions that are significant, doing it again without the US. The US has yet to really, at least publicly, impose sanctions on Russia since this administration has taken office again.
Why? I mean, I understand Donald Trump, and I don't need to get into the Putin-Trump thing. I think we're all hit over the head by that constantly. Okay, they're at war. They invaded a country. Why is Europe, why are the U.S. struggling with instituting sanctions on a country that's a borderline frontier economy?
I think we should differentiate. It's not the country. I think it's this administration. Congress has sanctions that are ready to roll. There's actually a package that's been on the president's desk for 3 weeks to impose additional sanctions on Russia. He won't sign it.
That will hinder Mr. Putin.
That will apply additional pressure. How much they'll hinder is a question. The why... I mean, the argument that the president is making is that additional sanctions are unhelpful to the negotiations with Russia. And so that is the argument. Anytime President Putin looks as if he is playing ball, it pushes off any sort of need for pressure. And the president seems to believe that argument.
Is there any leverage that the U.S. or the Europeans really have against Putin? It just feels like if we just look back at history over the last 100 years, these Russians they have some staying power.
They can, but you can lower the price of the oil price cap, which has been at $60 for the last few years. Oil's trading at, $65 a barrel? So you can begin to reduce the revenue that Russia is generating from oil. You can go after more third country actors. But we have yet to really see the U.S. do anything publicly.
I don't have the romantic life of Dan Tannenbaum. The Oliver, he doesn't have the Oliver and Wyman Gulfstream because Hugh von Steenis has it most of the time. I'm more interested in Dan Tannenbaum.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Right now, newspapers. We look at the newspapers. Lisa Mateo and her team of interns looking at 20, 30 rags to see what to do today. What do you got, Lisa?
Okay, I'm starting with the most glamorous sporting event in the world.
Love
We're talking
it.
about the U.S. Open, the tennis tournament. I know
First
you're
Tuesday
a fan.
is the day to go.
See? Okay, so it generates like hundreds of $millions every year, right? It's getting this $800 million makeover,
Really?
scheduled to be completed in time by 2027 for that U.S. Open. Construction's already started. So what is actually happening? Okay,
Please.
so it's including this overhaul of Arthur Ashe Stadium. So as Paul knows, sometimes it gets a little crowded. He's
Yep.
trying to sip his Tito's and soda,
Yeah,
and
didn't
he
like
needs
it.
more elbow room. Okay, so they're adding a little bit more space, putting a few more seating in there. They're also getting new building just for the players. So the players get this new building, state-of-the-art training facility, luxury accommodations, cafes just for them. So this has been going on. But the USA, how are they going to pay for this? That's the question that everyone is asking. Reserve funds, debt, and it's not going to require any more land in the park because they're leasing that out.
To me, it was when I went, it was way too packed.
Yeah.
It was just no fun. The merch going out of the store, Paul, was unreal.
It's phenomenal.
And
But
there's vodka with something
the
that
honey,
I couldn't even get in the line.
the Grey Goose Honey Deuce cocktail.
That's what it was.
That's
Thank
where you
you.
go. Yep, and that'll set you back $20 or $25, but it's worth it. But I go the first Tuesday because then you get to see everybody.
Yeah,
play.
I
and everybody's
agree with that.
practicing.
Yeah,
Nobody's
yeah.
knocked out of the tournament. You can go to a practice court and see a top 10 person playing in a practice round.
But it's
awesome.
crowded.
Yeah.
That's the thing.
Are they
Yeah,
going to
but
fix
it's-
the parking?
Yeah, but it's fine. You
Yeah.
take the Long Island Railroad, drops you right there. It is take the LIRR right to the stadium.
My
You
tour
walk right
guide.
in. You go to the day on the first Tuesday. That's
Next.
how you go.
I have to go.
Oh, it is
it's
a
great.
New York
Experience,
City
yeah.
It is a yes.
experience. Literally, it is one
I've
of the
only
best
been
things
there
in
like
there.
live reporting. I've never been to the actual.
No, go have fun. Yep.
Okay, let's go to Thursday Night Football. Okay, so in the past, it's been like this place, like this dumping ground, right, for games that are expected to not view very well. But things have started to change under Amazon. Bloomberg actually spoke with the head of sports and advertising at Amazon Prime Video, and they said viewership of Thursday Night Football increased 40% since Prime Video's first year of streaming the show. So that more people are starting to watch. The average viewer is also 7 years younger than other channels. So that's something that advertisers like. But they also scored their strongest lineup. So they have in week 2, the opening 2025 season matchup between Green Bay Packers, Washington Commanders. They also have 2 appearances from the Philadelphia Eagles. They have 10 divisional matchups on top of it. So
People are getting more comfortable
interested.
now
Yes.
finding sports on streaming.
And
It's
the
just-
answer is football's leading the way.
Absolutely.
Yeah.
I mean,
You're
they're
right,
just
Tom. Just
way
like it
out
always
front.
does. It always does.
Why is Mets Red Sox? I still don't understand the regional baseball thing.
Because it is a regional sport, like hockey. Hockey is regional.
Okay,
right?
football. Just do it like
Football's
football.
national.
Is
Well,
my
yeah,
answer.
but yeah.
Do you have time for one more here quickly?
I do. Okay, quickly. Okay, so the National Zoo's new pandas, right? We've been hearing about them.
Panda Cam.
Panda Cam, they're actually warming up to one another.
Oh.
So Who knows? There could be a baby along the way, but it's going to be time down the road.
It's a family network. Be careful.
Yes. It's going to be much more time down the road, but they're starting to show some signs of interest to one another. So the zoo staffers are saying, you know what? This is a good sign. They're bleating. Bleating is like that, I guess, a mating sound. I don't know. It's kind of like a sheep's baa, but a higher pitch. I'm not going to do it for you. But they're starting to, show that.
But reproductive possibility is how the Washington Post refers. Reproductive possibility only lasts a brief hours.
Yeah, they're very they like to be alone. Pandas. I didn't realize that. So they're very like.
I'm with the pandas.
But the males mature more slowly than females. Shocker.
No kidding.
So 5 years old is when they start this connection, and they're a little bit younger than that. So we have some time, but there's a positive sign.
I'm trying to put a bow on it. Lisa Mateo, thank you so much for our sex education today.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.